Okay, let's dive into Siemens Energy. Now, at first glance, you might think, oh, another boring, massive industrial company. But honestly, for investors, this is one of the most fascinating puzzles on the entire market right now. So the big question is, are we looking at a brilliant turnaround story, or is this just a classic value trap? Let's break it down.
Right. To really get what's going on with Siemens Energy, you have to stop thinking of it as one company. It's really a tale of two companies, moving at completely different speeds, but they're both trapped inside this one stock. And that's the central conflict you, as an investor, have got to wrap your head around.
So on one side, you have what I call the engine room. This is the part of the business building our power grids and gas turbines, and it is absolutely firing on all cylinders. We're talking record-breaking profits, all thanks to this huge global surge in demand for electricity. But then, on the other side, you've got the anchor. That's its wind division, Siemens Gamesa, which has been this deadweight, mired in a crisis so bad it almost sank the entire company.
So, to really appreciate the turnaround, we first have to understand just how bad the crisis was. Let's dig into what went so horribly wrong in that wind division, a situation the company's own CEO called a bitter setback.
Now, this quote is incredible. You almost never hear a CEO talk this bluntly. When Christian Bruce said this, it was this moment of shocking transparency. It was a signal to the whole market that these problems, well, they weren't small. They were deep, systemic, and had been ignored for way too long.
So what exactly were these issues? We're talking about really fundamental design and manufacturing flaws in their most important products. Things like literal wrinkles in the massive rotor blades and faulty bearings, stuff that could cause the turbines to fail way too early. And the key word here is systemic. This wasn't just a bad batch, it was baked into the system.
And the financial hit? It was just staggering. The company had to set aside over 1.6 billion euros just to cover the expected costs of fixing all these turbines out in the field. For an investor, a number like that is a bombshell. It completely wiped out profits and made people seriously question if the company could even survive.
And this timeline just shows how fast everything spiraled out of control. In the middle of 2023, the problems come to light. By the end of the year, things are so bad they can't get the financial guarantees they need for new projects, and they have to go, cap in hand, to the German government for a bailout. This was a full-blown liquidity crisis that brought a global industrial giant to its knees.
But, and this is a huge but, while the wind division was in a total freefall, something pretty remarkable was happening in the rest of the company. So, let's pivot to the company's energy backbone, the gas and grid divisions, and see how they became the powerhouse that would fuel this incredible comeback.
You know, this chart says it all, really. Just look at the profitability of these different divisions. Grid Technologies, it's basically a money-printing machine with a nearly 16% profit margin. Gas Services is right behind it, super profitable. And then you have Siemens Gamesa, the wind division, losing more than 13 cents on every single euro of revenue. It's the two-speed company right there in one slide. Night and day.
So what on earth is behind this incredible performance in the core business? Well, it's a phenomenon that analysts are calling an energy supercycle. It's basically this massive wave of demand for electricity and all the gear needed to support it. And it's stronger than anything we've seen in decades.
And this supercycle isn't just a buzzword. It's being driven by three really powerful long-term forces. First, you've got the explosion of AI and data centers, which are just unbelievably power-hungry. Second is the massive push to electrify everything, from our cars to our factories. And third, there's this urgent worldwide need to upgrade electrical grids that are in some cases 50 years old and just can't handle all this new demand.
Okay, so this brings us to the climax of the story. How did the incredible strength of this supercycle allow Siemens Energy to not just survive the wind crisis, but to basically overpower it financially and stage this dramatic recovery?
The key is right here. A record order backlog of 138 billion euros. Now, for an investor, that number is gold. It means the company has years and years of revenue already locked in. It gives them incredible visibility and stability for the future. It's a mountain of guaranteed work. And all that work has completely transformed the company's finances. After almost going under in a liquidity crisis, Siemens Energy now has what analysts are calling a fortress balance sheet. It ended its fiscal year with 9.2 billion euros more in cash than its total debt. That is a massive turnaround and a huge sign of financial security.
So with all that financial strength, what did management do? They made a huge pivot.
They brought back the dividend, which is great, but even more significant, they announced a massive €6 billion share buyback program. These are direct signals to shareholders that, hey, the crisis is over and we are extremely confident about what's coming next.
So, with the company firmly back on its feet, we finally arrive at the key questions for any potential investor. What's the argument for buying the stock now, the bull case, and what are the big risks that could still screw it all up, the bear case?
The bull case is actually pretty simple. This energy supercycle is the real deal, and it's going to last for years. And while that's happening, the wind division will slowly fix its problems and finally stop losing money by 2026. The bear case? It's that the wind turnaround just fails, and at the same time, a flood of low-cost Chinese competitors comes in and just destroys profits for everybody.
And you can see this whole conflict reflected right in the company's valuation. When you stack it up against its main competitor, GE Vernova, you see something really fascinating. Siemens Energy is actually growing much faster, but its stock trades at a way cheaper valuation, about 30 times forward earnings compared to GE's 50. So what gives?
Well, investors have a name for this. They call it the wind penalty. The market is basically still punishing Siemens Energy for that whole crisis in its wind division, pricing its shares cheaper than its peers because of that risk.
And that leads us to the final, crucial question you have to ask yourself as an investor. Is that wind penalty, that big discount on the stock price, a historic opportunity to buy into a powerful supercycle on the cheap? Or is it a totally justified warning sign that the risks in that wind division are still way too high? The answer to that question, well, that's the key to this entire investment puzzle.